Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. So most of us out there are pretty familiar with how to ask questions in this session. We do have a brief Q&A at the end. We'll never get through all the questions as there's so many great questions and limited time. So if we don't get to your question, always take that as encouragement to attend the insiders meeting, where you will have a 45-minute Q&A portion and a much higher likelihood of getting your question addressed there. All right, so I think most people are pretty familiar with that process, but welcome to anyone who might be joining us for the first time. That about wraps up the housekeeping details. I'm interested to hear Rob's thoughts tonight because the market broke to the upside today and we're waiting on the CPI tomorrow, so that could definitely change things. And yeah, without further ado, let's go ahead and get into the good stuff. I'm excited to be here with you all. Thank you for joining us for this live session. Now, at this moment of the time, I'll introduce the man of the hour, Rob Roy.
Thanks, Zach. Welcome, everybody. And those of you that joined us last week for a special July 4th edition of TradeFinder. No fireworks going on in the background tonight. So you can see I took down the extra decorations that we had for the special July 4th. But are there going to be fireworks in the market tomorrow? That's going to be the question. As Zach said, we're awaiting the CPI report. We had a little bit of a triangle pattern. It's pretty small, so it's not that significant, but Elliott himself always said, don't diss the small triangles, pay attention to those as well. So we had a little bit of a breakout to the upside today, but if you've been following this for a while, and welcome to all of you joining us on the various social media platforms, you know, one day doesn't mean a thing. We need a follow-through day. Are we going to get that? Are we going to get a follow-through to the upside tomorrow, or are we going to reverse? And the weekend update that we posted, I asked you the question, do you think we're going to go to 460 first and then correct? Or are we going to do the correction first and then go to 460? For some reason, the Elliott Wave algorithm likes this level here around 460. And I think tomorrow we'll know, not just because of the CPI report, but we'll know whether or not we're getting follow through from this upward move that occurred in today's trade. If we take a look at volume, you can see kind of waiting on that CPI report, it seems. So that's not the kind of volume you want on a breakout day, but I will tell you that oftentimes when you break from a triangle, it's not on huge volume, and then the volume kicks in. So I do expect more volume tomorrow, but back to the question, is that going to be on a follow-through day or a reversal day? When we get that CPI report. And the reason that's of significance is how many more rate hikes do we have to anticipate from the Federal Reserve? We had thought there was one more than they were going to cut. That's what the Fed Fund Futures was pricing in. Then they told us, no, at least two more. And the rate cut this year went away on the Fed Fund Futures. So I think that's why the market is waiting to see what that number is tomorrow. And then that'll be followed on Thursday by the PPI report. So the CPI is the consumer price index. That's what we pay. That's the retail price. And then the producer price index is the wholesale price. So that's what the producers pay. And then what kind of pricing power do they have passing that on to the consumer? So those are the two numbers that'll be coming out over the next couple of days. But a potential breakout today, but you can't call it that yet because we need that follow through. And again, looking at it on weak volume doesn't give us a whole lot of confidence yet. So tomorrow is going to be a very interesting day to see what happens in the markets. Looking at interest rates, we had that breakout. You know, again, if you've been following us, I've talked for, seems like forever, on this range here between 34 and 40 on the TNX. Was kind of the sweet spot that we could have movement to the upside, even on the tech stocks with this break above here. And then we wanted to see if there was follow through to the upside on rates, and there hasn't been. We gapped up, we came back down, but look at that, a doji today. Once again, waiting on that CPI report tomorrow. We didn't quite fill the gap, but we're awful close. So are we going to break back down here? If we do, then I think you could expect a rally in the tech stocks and maybe some sort of movement out of those Super 7 that have been a bit quiet since the big run following their earnings reports. But if it looks like more rate hikes to come, depending on the CPI number, and we bounce off this 40 level and head higher, changes the narrative significantly, especially when it comes to the Qs. So if we take a look at the dollar, this is where I wanted to focus. We've been talking for quite a while. Notice no 5-wave pattern here, but we do have a zigzag here on the dollar. If somehow we could break below that 101 level and we're breaking to the downside, notice where we hit today, the 61.8% level, but we've got a 55% B wave correction. That's right between a 50 and the 61.8% fib level correction, which gives you the anticipation of 100% extension. If we get 100% extension, that means we break this long-standing support in the dollar at 101 and 101.32 today. So we're getting awfully close. If we can break that level, then what I know a lot of you have been waiting on, because you asked the question week after week after week regarding the metals, silver and gold. So I thought I'd show you the chart of the SLV, and it's consolidating. So it's not getting too excited yet on this movement down in the dollar, which has been pretty pronounced over the past 3 trading sessions. You can see the dollar is a touch oversold from the 10-day moving average, but it's almost like metals are saying, yeah, well, let's see. Can we break that level? And I think if we do, then you see a significant move to the upside, noting that this 5-wave pattern that's labeled here had a 83% correction in the wave 4, which means that goes away. That's disqualified. And what we're looking at is a smallish ascending triangle here on SLV. But I would say that if the dollar were to break below 101, that becomes a significant break to the upside on SLV. If you guys want to look at GLD, you can do it during the Q&A. We'll look at it then, but silver has been kind of the metal that's been following for a couple of years now. So gaps all over the place here that need to be filled. And as we've been saying, the metals will go inverse to what's happening with the dollar. But with that significant move down in the dollar, to just see, especially silver, kind of saying, we're going to wait and see. You don't want to wait too long if you're interested in getting in here, because if we break below that 101 level, this move to the upside out of SLV could be significant in a very short period of time. And if we don't, if we come down here and we hold this level here at 101 and it's just a test and we bounce back to the upside, then I'm sorry about the back and forth here, but it warrants it with the conversation. We break to the downside out of this small ascending triangle, and that brings us back down to a likelihood of testing those lows from March on SLV all the way down at 18.5. So that's why talking so much about the dollar, it's going to mean a lot as far as where we go from here out of the metal, specifically SLV that we're talking about, on whether or not it's an upside breakout or a downside breakout. Going to be really, really interesting to see how that plays out. Now let's take a look at the VIX, and then we'll get to the rest of the markets. I think we talked about this 2 weeks ago, that with this consolidation down here and the wave 5 hit the 61.8% fib level there, and we had all of this consolidation here around 17 for what, 6 weeks, nearly 2 months. We just kind of bounced around that 17 level, and then we broke it significantly at the beginning of June and seemed like we need to test that. What was support becomes resistance and vice versa. And we did. So the VIX came up on the 6th of July, hit that 17 level, and we've come back down. So the question becomes, is this just some consolidating here, getting ready to break back above 17? And if we do, then I think we easily go up towards this previous wave 4. So you can see the VIX around 22. Or are we that was a successful test, and then we're going to move lower and we'll break this wave 5 low and look to move down towards 12 or even lower, and that would coincide with an upward breakout. So you can see all the significance that is lying with what happens tomorrow with that CPI report. The PPI, I think, is just as important because it matters what the producers pay versus what they can sell for, where their profit margins are. But it does seem like the CPI is more of a headline type number that gets more of the play in the media, even though maybe it shouldn't be. Maybe it should be the PPI that gets more media attention, but that's not how it works. The fact that we did test 17 means that we could go lower in the VIX, and we're going to have to wait and see how all that plays out. All right, so let's go ahead and take a look at the rest of the markets. The Dow was strong today. It's been underperforming, so it's trying to catch up. And you can see that we had this big move to the upside. There's the underperformance where we had the gap down, a little bit of an island reversal, but that's been canceled out because we filled that gap so quickly. When you have an island reversal, and what I mean by that, if you're new, is you get a gap up and then a gap down, and these 3 bars here are just kind of floating on their own on an island with these gaps. If you get follow through on that move, then it can be a change of direction indicator. But in this case, we came right back up and filled this gap, held the 50-day moving average. So basically we gapped down to the 50-day moving average and came back and filled it. So it cancels out the potential of that being a reversal indicator. No longer an island reversal. Those bars were on an island for a few days, but now they've been bridged, if you will. I think I'm creating new monikers here in the world of technical terminology. But the fact that the Dow finished to the upside, finished near the highs of the day, filled that gap, makes you wonder, are we moving up towards that wave 5 target? The wave 4 here, really close to that 38.2% level. And when you look at that, you would expect a 61.8% corrective or extended move. And that just barely gets us to the previous wave 3 high. But if we were to extend that C level to the next level, which would be 100% extension, it happens to be right where that tap box is. And if you're new and you haven't seen this software program before, this is from hubb.com. You can go to their website and find out more about it. To me, it's the best Elliott Wave software that exists on the market. Is programmed exactly to Ralph Nelson Elliott's algorithm. There's no external factors, nobody's own configurations, etc. So the algorithm itself is liking this level around 355, and a little bit different from where the SPY was, where we're saying, could we break down first and then break up? We've already labeled the wave 4 on the diamonds, which is giving you a little bit of a belief that perhaps the move, at least in the diamonds, is to the upside. And could we go all the way up and hit that wave 5 target without the SPY following along? That seems a bit hard to believe. So maybe tipping its hand a little bit, but we got to wait till tomorrow and find out and see how that ends up playing out. So looking at the Qs, so you can see the chart on the Qs, just kind of hanging around here. A tiny triangle, and I know Elliott said don't discount the small triangles. That's a pretty small one right there, but nonetheless, it is a triangle. And what I mean by that is we have a pattern here of higher lows and lower highs, and that creates a symmetrical triangle pattern. The breakout is normally the width of the mouth of the triangle. So you go from the low out of the mouth to the high. And it's only about 10 points here on the Qs. So it's not a big triangle. We're not calling for a big breakout, but look where that wave 5 target is here. And what happens when you have a wave 3, again, the algorithm likes this level just above 400, and we could run to that level in the wave 3 before we get the wave 4 correction, or we could get the wave 4 correction first and then the wave 5 goes to that level. So when you're watching a wave 3 and the wave 3 is strong and you see these targets, sometimes the wave 3 actually runs there, and these two moves here are price projections, and they will adjust and move according to what happens subsequently in the wave 3. So we'll see over the next few trading days how we break out of this small symmetrical triangle. The key here on the Qs is we've got to get above this previous wave 3 high, and the actual price there from June 16th, the high was 372.85. So we got to break that, and then we could look to see, are we off to hitting that wave 5 target? I know, well, especially with the yield curve inversion, we've cautioned on the markets with that. It normally is pretty accurate as far as forecasting a recession. So do we get the recession first, start to get some bad earnings reports coming in, the market's correct, and then we start looking towards, after getting past these next couple of Fed rate hikes, then we start looking at a rate cut, and then we get the next move to the upside. You can make a good case for that. But you could also make a case for, well, we haven't had the bad earnings yet. We don't see the signs of the recession yet. We still have a strong jobs market, and perhaps we extend this move here to where it gets really extended, and then we get a more significant correction when the next quarter earnings start coming in, we get that out of the way before we start looking into sometime next year for a rate cut. Both those scenarios make sense. Both of those you could create an argument for. Again, is why I ask in the market update for y'all to post a comment. If you haven't seen it, go to the market update on our channel on YouTube, Elliott Wave Options, and leave a comment on which of those two scenarios you think plays out first. Correction first, then rally, or rally, then correction. It seems likely that those two things are going to occur. Hard to know which one happens first. Now, if you're a believer that the small caps are a good indicator, risk on, risk off, you'd be thinking, okay, well, the fact that the IWM, the Russell 2000 has broken back up here towards 190 is giving an indication that there's an appetite for risk. And that would mean the likelihood that we do start to see a continuation of the rally to the upside before we get a correction. We went up and tested that level back there in the middle of June, came all the way back down, but only to the 50-day moving average. And now we're all the way back at 190. So we had that time frame where we had condensed the trading range that the IWM was in between 170 and 190, which is where it had been for a while, compressed it down to 170 to 180. We broke above it, went right up to 190, came down and tested the 180 level. Again, what we've talked about earlier, old support becomes new resistance. Old resistance becomes new support. They work hand in hand. That's exactly what happened. This is textbook technical stuff here. So we went up to the wave 3 high there at 190, tested the 180 level. That was the labeling of the 4. And now we have a 5. So the 4 is in. And the only question becomes, how far does this wave 5 go? We are a touch overbought now on the IWM. You would like to see a break above 190. Wow, if we could get the IWM to break above 190, I don't think this wave 5 high target is high enough. I think that if that were to occur, because it's been so long since we've been above there, we did get above it very briefly in January, but really quickly came back down. So if we could get above 190 with some follow through, we might see some sort of a big run in the small caps. So is that a head fake? Is that lulling people in to say, hey, take more risk, and then they're going to smack them down with a big correction? Or is this a foreteller that we are going to make a rally here before we have a correction towards the end of the year as we start to get some weaker earnings reports? There's no question the consumer is still spending. I feel like the consumer wasn't totally honest in that last consumer confidence survey, or at least the people that they surveyed, and it's a limited survey. We're saying they're not going to travel. People are traveling. Flights are full, cruise ships are full, highways are full, oil's moving to the upside, people are moving. Consumers are traveling, at least so far, and we're almost to mid-July. So is it just a head fake at the beginning of the summer? Doesn't appear that way. Maybe things change. Maybe people change their minds. Who knows? But that was the results of the consumer confidence survey that brought oil back down, and now it's moved back to the upside because the facts are people are traveling. I live in Florida, in the big, I've talked about this in the past, but the big route here is Orlando to Atlanta, two of the busiest airports in the world. They fly every hour between there. Normally it's just 737s on every flight. They're bringing in the bigger planes because there's that much demand. So we have 767s and 777s just flying that 1 hour jaunt from Orlando to Atlanta. And for whatever big cities that Orlando doesn't go to, Atlanta goes to. And, if that's an indication, then the consumer is still spending. And that could be a catalyst to break us out of this range here and move to the upside. There's arguments to be made on both sides of the market, and that's why you kind of want to be a little bit cautious at this point in time. We've sent out some directional trades and had a heck of a run here over the past couple of weeks. I'll show you an example here in a minute. But before we get to that, I do want to show you Bitcoin. We know what's about to happen with the halving occurrence at the beginning of next year. And we just can't break above that 31,000 level yet. But look how we've held the 10-day moving average. Every time we tried to test below it, we've been able to close above it. Good consolidation here around 31,000 when we hit that level. Back here with this vertical move. I made the comments that if you're long Bitcoin or the cryptos, you don't want to see it bust through 31,000 right now, because when you break a major point of resistance and you're already overbought, those moves don't hold, they get retraced. The best scenario is exactly what's occurred. Massive consolidation here right underneath 31,000. So I would submit that if we are able to break above 31,000 now, that has a much greater chance of holding and taking off on a run into the first quarter of next year, which is what normally happens when you have these halving things, at least every time so far on Bitcoin that's occurred. So if you're long the cryptos, even though you might be a little frustrated that not much has happened over the past couple of weeks, in reality, that's the exact scenario that you'd want. If you could type it out, that's what you would want. And you could say, oh no, I would have rather that big move to have continued. But I'm telling you, that had we continued moving vertically up like that, it wouldn't have held and we would have retraced. So with Bitcoin, we do have the opportunity to move back to the upside and break out above this 31,000. And we may be off to the races there, because look at all that clean air all the way up until we get towards, a little bit of stuff here. But the reversal is all the way up at 48,000. So we could be running for a while here if Bitcoin could get above 31,000 with some follow through. I think that's going to be interesting as well. But constructive process so far on Bitcoin. It has to do it. It has to actually break 31,000 with follow through. Until it does, it's all speculation. All I'm saying is that this is the kind of consolidation you would have liked after that big move up there. And that has the opportunity to continue to move higher. So that's Bitcoin. Let's take a look at a few of the international markets as well. The EWA, Australia, that really managed to hold the last bastion that it had to at 22. And you can see that it held it there in the middle of June, but it only made it to the 50-day moving average. It came back down. And then we had this move lower here on the 6th of July. And it was like, here we go again. But once again, no follow through. And we've been able to get back above 22 once again on the EWA. So seems likely that we're going to go up and challenge that 50-day moving average again. Can we get above it with a follow-through day? At this point in time, you still have to lean a little bit to the negative side, because we have a pattern there of lower highs with this support at 22. So a large descending triangle. And as I've mentioned numerous times in the past as well, when you have a triangle, it means a breakout. I know there's a lot of information out there. Descending triangle means you're going to break lower, and ascending triangle means you're going to break higher. The data doesn't show that. I think I have as much research on triangles as anybody around. And a triangle just means a breakout. They could go either direction in any of the three patterns: descending, symmetrical, or ascending. But we do have lower highs, and so that's slightly concerning. But holding here at 22 is a positive. Let's see what happens if we get back up to the 50-day moving average. Can we break above it? And if we can, Then we look at, can we get above 23? So a couple of roadblocks, if you will, in the way for the EWA. Got to get above that 50-day moving average, then have to break above 23, both of those with follow through. So some work to do, but a small victory at least that we were able to hold 22 without a follow through to the downside, because had we broken below that, it was, and Zach, I know you're probably doing multiple things, but what was the scenario if we didn't hold 22?
80 bar the door.
80 bar the door. Yeah, 19.5 is where we were headed, because there is nothing stopping the EWA from going there. But it didn't. And we'll see how that plays out over the next several trading days. The EWC, so our friends up north, we had this big, huge triangle pattern here, symmetrical triangle, a little bit of a head fake. Great lesson there. Talk about this a lot. And people are always so quick to want to take one side of that triangle off, because you see a triangle. We like to do strangles, which is buying an out of the money call and an out of the money put. Time decay becomes an enemy. You get a breakout like this, you break to the upside. The temptation is, let me take that put off, because if I take the put off and we break higher, I'm going to make more money with that call gaining value without a put losing value. But there's so many head fakes in the market. You wait until one of the legs means that there's no more risk in the trade. And this is a perfect example of why we do that. That was a head fake, false breakout to the upside. We're back right into the point of the triangle with the 10, 30, and 50-day moving averages all at the exact same spot. So we're going to get some sort of a breakout. And this is a significant triangle. This isn't one of the small ones. So we have the low at 32, the high up at 36. That's 4 points. So we're going to get a major move out of the EWC in the not too distant future. Can't tell you what direction it's going to be, but it's coming. And this gives you an idea of how you had the wave 5 pattern labeled here, and then you went into corrective mode. Flat zigzags and triangles are the corrective patterns within Elliott wave. And so there's no 5-wave labeling here, because we're in corrective mode with this big triangle. We'll see what happens there. Anxious to take a look at the INDA. So I'm sure you all have been, because the best performing, you could argue the best performing market, not just internationally or globally, but anywhere with this move higher. We came back down to the 10-day moving average. We talked about that in our last insiders meeting on how we had come back down to the 10-day moving average. That's what we do every Thursday for our alert subscribers at ewotrader.com. We do an hour and a half meeting with a full 45 minutes of Q&A. And we're here at this resistance area at 44. The algorithm likes the price around 45.5. So same scenario we were talking about earlier. Does the wave 3 go to that level? Then we correct, or do we correct first? That's an awfully good looking chart there. The 45-degree angle, if you could just sit down and write your ideal pattern for a move to the upside, this would be it. And this is why I like the 45-degree angles, but because you can see the corrective moves, and we're always going to have corrections, market moves and impulses and corrections. That's what Elliott wave does, is it identifies the impulses and corrections. And when you have a 45-degree angle move without the vertical stuff, the corrections tend to be smaller. And now we're at resistance. So we have this huge ascending triangle here. So the question becomes, does 44 hold? And we correct back down towards this wave 4 level before rallying, or do we break above 44? And remember, we have to break above it with follow through, but we're going to give it a go. It looks like with today's move, if we can break above 44 with follow through, we easily hit this 45.5 level, I think, and we'll see if that's the end of it, or if we can move higher. I like to look at the DMI when you see patterns like this. Is there enough strength to break through the resistance? And according to this DMI, that's about as supportive as you would expect to see. You can see these bumps to the upside here in the ADX, which is telling you the strength of the move. The green line is a positive directional indicator. That's measuring buying pressure. The red line is a negative directional indicator, measuring selling pressure. You can see the buyers are firmly in control here. There's good separation, and we're moving higher. It leads you to believe that there is enough strength to potentially break above that 44 level and take off. Everything has to do its thing. All we can do is put as many percentages in our favor as we can. Nothing's 100%. We know that. But when you look at that, you would say, hey, there's a possibility that we break through that 44 level and continue off on the INDA. Very, very impressive. We look at the EWG a lot, and we had a heck of a run there and just been going dead sideways for a few months here. You could argue that we've been going sideways since January, where the big trading range here has been between 28 and 29. We tried to break below it, didn't hold, tried to break above it, didn't hold. We're just kind of ping-ponging back and forth here between this 28 and 29 level. That's a pretty tight trading range. So when we do get a breakout on the EWG, that looks to be pretty significant as well. And once again, notice the 10, 30, and 50-day moving averages all converging around the same price. But we broke below 28, no follow-through day. We're back above 28. Do we run up to 29? We bumped our head here towards the 50-day moving average. See how that plays out throughout the end of the week. But we had that big run coming from the lows of October, when you could have argued that this was one of the better markets after underperforming for, what was it, 2 years. We looked at how the EWG just kept relabeling Elliott wave patterns on the way down. Just every time we got to a wave 5, it relabeled to a 3 and a new wave 5 low, and it just kept doing that. Then we had this big rally, and all we've been doing is consolidating it since then. So we'll see what ends up happening there. So I did want to show you one of our recent, and this was really recent, alerts that we sent out, and that's what we do at ewotrader.com. We have an alert service where we send you out alerts for entries, any adjustments, and exits. As you know, here at TradeFinder, we just identify case studies, and we can give you an opportunity to do whatever you will there. But here we kind of guide you through the entire process. The entry alert on WRL Whirlpool, it was moving into an earnings report, and we had a nice zigzag pattern, my favorite directional pattern here, which gave us a target up around 152. And then the question is, could we possibly go to 100% extension up at 161? But the first target price was 152, and bam, it hit it very quickly, generated a 50% gain here, as you can see, in just 4 days. So very short-term move here as Whirlpool moved up and hit that target on a big bar to the upside. So we're a bit overbought here from the 10-day moving average. We hit that target spot on. We closed the position out, and I like to pat myself on the back when we say, hey, you know, we nailed that exit. Couldn't have been better. We had just a very small drawdown here, as you can see from the mark-to-market graph. It barely ever went below the zero line, so we started moving up right away. Again, we were only in the trade 4 days with that 50% gain, but it was up again today. So had we waited another day, we could have generated even more, but you never question if you're happy taking the gains when you take it. Don't second guess yourself, or you'll drive yourself insane. It's just not worth it. But generating 50% in 4 days, we'll take that every single time and not second guess it. So it was a really good trade. The idea was the housing market has been staying really strong. We had that great trade on MTH, on Meritage Homes, and we have earnings report coming up. Likely the earnings are going to be strong with Whirlpool because the housing market's been good. Expected to move up into earnings, and that's exactly what happened. So moved up into earnings, followed the Elliott wave pattern to a T. It's really overbought now. So, you know, perhaps you could argue, he exited 1 day too soon, but I'm going to go back to don't question your exits when you have a great return like that. Be happy with it. Move on to the next trade. Nobody hits the exact bottoms and the exact tops. You try to take your piece out of the middle, and that's what we did. And so we were pretty happy with that. Reviewing some of our previous case studies, and we only have 2 left. Last week, we closed out a ton of them, if you were with us on our July 4th edition here. So we had PRIM. That was back on June 6th. All the rest of them, except for what we did last week, have been closed out. Really nice gains. So we had this move to the upside. We said, well, if you didn't take those gains back there, if you're waiting for the full 10% move out of the stock, our kind of rule is if we can get 30% in 3 days or less, we're going to take that. You saw that with the 50% gain in 4 days on Whirlpool. So you could have made an argument that you could have closed this out back on the 30th of June, but I said, hey, for those that may not have taken that off and are still following it, we'll keep an eye on it. We're still in a wave 3, and we moved back down, but we just tested the lows there at 29, and we look at the 10-day moving average, tap the 10-day moving average on the open, or right after the open, if you will, and closed higher. So if you're still in this one, I wouldn't get out yet. Wouldn't have blamed you if you took your profits back there on the 30th of June and said, hey, I'm done with this one. But look at where we are here. We're at this resistance area. And if we can break above this level at 30.5, I think we go to that 33 level very quickly. So I'm leaving this one on here in case some of you are still following it. But again, if you took the gains, wouldn't begrudge that whatsoever either. And then the only thing we have left is Aflac that we looked at last week. That was our case study consideration for July 4th. And looking at this one on the fact that, it's insurance. And if the market does correct, it's a little bit of a defensive area. The thinking being that people still going to have to pay their insurance premium. So when the market corrects, when the economy weakens, you look for areas. Tobacco, alcohol, and gambling have always been the sin stocks. Those have always been defensive in nature. Those are our vices. The viewpoint is, regardless of what's going on in the economy or the market, you'll find a way to eat, drink, or smoke. But there's other areas. It's not just those 3 sectors. And insurance, people paying their health insurance premiums. We have a set of higher lows here, a pretty nice ascending triangle pattern that's set up right now. And we take a look at where we are. Still right there fighting that upper level. We did break above the resistance at 70 today. You know the drill. It doesn't matter. We need a follow through day. If we can get a follow through day tomorrow on Aflac, then we're likely going up to those recent wave 5 high targets from January back around 74. And that would certainly be a point to go ahead and take those gains. So far, so good. Little bit of profit in the position from last week, not a whole lot, but you should be sitting in the green on this one and waiting to see if there's follow through tomorrow. Now we'll take a look at our pre-computed scans. If you're not familiar, the software here at Hub does give you some pre-computed searches. These ones that say EWO on those for Elliott Wave options, those are my search parameters that are programmed in. So if you are a subscriber to our alert service and you have the software from Hub, you get these searches. So you see what I'm looking at every single day. We have 8 with today's update on the impulse search. That's a lot. Let's see what Trex. Gosh, we had that one before. We already closed that one out and it showed up again. Take 2 Interactive, which is interesting to me, into it. Visa, let's take a look at Visa, see what that looks like. That's the consumer. That one could change tomorrow though, right? Based on what the CPI says, but oh wow, this is going to be tough to beat. Look at this move here. When you take a look at our indicators, specifically the DMI, that's as good as it gets from a confirmation standpoint. And let's see if we have an Elliott wave pattern. We're at a wave 5 extension. We've broken above the 100% level. And the key here that I was looking at even before I turned the Elliott wave on was the fact that we broke above 235, which was resistance going back from January. So boom, hit it, backed off, hit it again in April, hit it again in May. And then now we were able to break above it with follow through. And the DMI is telling us that we likely have more room to run. When you have a wave that could go to 161.8, so it could have a lot more to go. The question mark there becomes what happens in the CPI report tomorrow. But if the consumer is still spending, which the data has shown they are, what better place to be than Visa? And man, technically that looks so good. Breaking above resistance, testing it, moving higher again. See what the volume looks like. That's not the kind of supportive volume you want. That's a little bit of a negative there. You would have rather seen better volume on that breakout today, but sometimes the first day of a breakout is on lower volume and volume kicks in the second day. We talked about that at the very start of the webinar. the question becomes, does the volume kick in on a reversal or a continuation? That we'll find out tomorrow. That looks awfully good, though. That one's going to be hard to beat. But let's go take a look. I want to take a look at Take-Two Interactive. You know about all the stuff that's been in the news about the merger, et cetera, here. And look at that day today. Was that earnings today? Or was that just a significant break? No earnings report. Somebody may know what the news was today. I would expect that's the volume you want on a breakout day like that, unlike what we had on Visa. So again, that's the only negative I could come up with Visa. Really good looking supportive DMI. Let's see what the Elliott wave 3. Well, as soon as I get done saying that Visa is going to be hard to beat, that's pretty darn good. The only negative here is the fact that such a big move today, we're a little overbought. A tiny bit, perhaps we get a little bit of a pullback in the morning. So that one looks awfully good as well. Very minor negatives on both these two stocks here. So we may do a bonus one because we don't have much to look at. We've had a heck of a run. If you go back and look, if you're newer joining us here at TradeFinder, please go back and look at our history. All of our recordings for the past couple of years on TradeFinder have been posted, and our record is pretty phenomenal on these case study considerations if you've been following along and exiting at appropriate times, et cetera. I mean, we've had a heck of a run, just a handful of losers, really, over the past couple of years. It's been amazing. But those, maybe we'll just do a bonus one, and we'll do both Visa and Take-Two Interactive. Vive, I love this one. This stock shows up all the time. It just doesn't always have a lot of liquidity in the options. Man, these all look good. Good solid volume there. No getting carried away on the volume. Still room on the CCI. Very well for. Let's see what the. Let's just take a quick look here. What the options look like on. On Vive and see if that's been the negative in the past. But I feel like the last time we looked at it here, the number of options was better, and it is. Yeah, as there's more strikes. In the past, this would show up a lot, and there just wasn't enough liquidity. The spreads are tighter. So yeah, goodness. Take your pick. Flip a coin. Holy cow! They all look good. All these three look really good, because what's going on here is we had resistance at 200. That's one of those round numbers, the tractor beam effect from Star Trek that I talk about a lot. We bumped our head against it 3 times and broke above it today. Can we get the follow through tomorrow? So same scenario there with Visa. Did we get a follow through day? So I'm going to write all 3 of them down. So we're going to have a super bonus because we don't have much to look at. And, you know, we've had such a good run here over the past few weeks with both our alert service at Evo Trader and these case studies that we've identified here. So you guys figure out what you want to do from here. You take your pick. So I'm going to write all 3 of these down. We'll analyze them next week and see which prove to be the best. All 3 of those look good moving to the upside. I can't really discount. I mean, you know what the negatives are. They need follow through. So be that as it may, let's see if they get follow through tomorrow and then what happens over the rest of the week. So watch for that. You know what to look for. You've been here long enough. But there's 3 possibilities. And know that if there's a corrective move tomorrow, these become disqualified. So we don't want them anymore. But if you look like you're going to get follow through on these moves, then these are viable candidates. So there's 3 candidates here. I'm not going to name what the exact case study, official case study is for this week, because all 3 of them have negatives that need to be played out next week. So this is going to be a learning week. This is going to be an educational week. We have 3 candidates. See what happens tomorrow. You guys make your choice, and then I'll be really interested to hear what you guys decide when we get together next week. All right, Zach, that's it for tonight. So let's open it up to a few questions here before we wrap things up.
Yep, that sounds great. Got a special bonus session tonight, so that's awesome. I'm excited to watch where those go. I see we have a hand up from Ron here on Zoom. We actually don't have time for voice questions in this session, unfortunately. However, we do take voice questions in the insiders meeting, which would normally be taking place this week. We are actually off this week, and as a reminder to all those joining us via Zoom that would be joining us on Thursdays, we are off this week, but we'll resume the following week. So please feel encouraged to ask your question. Then we'd love to hear your voice. So I think the subscribers would be a bit upset with me if I didn't pass through coin as the first symbol.
I figured that was coming. I almost said it when we did Bitcoin, but I thought I'd let it go. I saw it today. It's like, that's coming. I mean, look at that move. I mean, we knew it was coming. What did we talk about last week? I think this was it Thursday night, Zach? We were saying it's got to get above 80. There, we made the run. And they took the regulatory issues that have been dogging this stock for a while. That went away. And if we could get above 80, it would take off. Now, in fairness, what I thought the scenario would be Bitcoin breaking above 31,000 and dragging coin with it. I think that was the commentary that I made, was if Bitcoin takes off running towards that halving next year, could coin stay back? Didn't think so. And it turns out the exact opposite happens. Coin breaks first, but they kind of move together, which does make you wonder, is Bitcoin far behind? Is it going to take off and run? But yeah, one heck of a move, very well confirmed with the DMI. We take a look at volume, almost too much volume, because when you get these massive spikes, what happens if you wonder, well, can there be too much volume? Well, there can, because what ends up happening is that everybody that wanted to buy, bam, bought it once, and then there becomes a void of buying, and then you get pullbacks. And in this case, it wouldn't be such a bad thing because we're a bit overbought, but that is a powerful break above resistance. This is going to test that follow-through rule. Gosh, if we get follow-through here, it's hard to imagine coin doesn't go to 100 now. Now, whether or not we come back and test 80 first because we're a tiny bit overbought now, and that's a big, massive volume spike. Does that happen first, or do we just run to 100 and then we correct a little bit? Either scenario could play out, but the bottom line is whether it's sooner rather than a little bit later. I don't think it's a lot later, a little bit later. I think coin's going to hit 100 now. That's the breakout you were looking for, but maybe if you had your pick, it would have been just a little lower of a move with a little less volume. But if you're in it, you're like, what are you talking about? That was awesome. So yeah, I figured that one was coming today, Zach. I did. When I saw it, I was like, that's going to get asked about.
Hope to be on the awesome side of that, no doubt. So with the next one in hot stock of tonight, it's going to be DKNG.
Oh, wow. Good old DraftKings. Interesting. Football season, not too far away, right? And people are getting ready. All right, people are so excited about this football season for some reason. I mean, it's even the pool that I'm in is already talking and creating their chatter and stuff, and so people are ready for this year's football season for some reason. I went to Florida State. I couldn't be more excited about the upcoming college football season myself, so I get it. We've been down for a while. We had a decent finish last year, so we are expecting some good things this year. So I'm pretty excited too. But the reason I bring that up, football is the biggest thing for any of the gambling sites. And that's a heck of a move there. Was that earnings? I'm not really familiar with what the news was that created that move to the upside there. Wasn't earnings. So maybe somebody knows the news, or maybe it's just a significant break out of a triangle, because there's your ascending triangle. That's a big break. We do have a doji there today. Good solid volume on the break, but we don't have that big. See, here's the example. I was just talking about why you don't want these big, massive volume spikes, because then you get a void. Well, look what happened back here on the 17th of February. And that's why we like doing this. This is an educational format here. So you get this big move here, but it's on really huge volume. Then what happens? A void of buyers. So you get a pullback. Exactly what I was just talking about. Zach's almost like you playing this out to illustrate what I was just talking about. Difference here is that we get the big break and it's just good solid volume that can continue. We still are a little overbought short term, so a little bit of a pullback would be okay, but I don't think you're going to get this kind of where you had a big, not a big, but a significant pullback and then a lot of consolidation to get rid of that. I don't think that happens this time. I think any sort of pullback here is short-lived. It looks like DraftKings wants to take off and run. And so I apologize. I missed the news if there was on whatever caused that. But yeah, heck of a breakout out of that triangle. And it looks like it has more to go. Let's see if it pulls back a little bit first, but it doesn't have to, because the volume is exactly where you want it to be. Just good solid volume on the break. That's the ideal scenario.
Yeah, we could definitely talk about that one a bit more, but for the sake of time, I'll give you the next symbol. It's going to be GPI.
Well, we had this one as an alert. We had it here and it went up to 260. That was our target. We looked at that back. So the entry was on June 13th. So for those of you that are joining us for the first time, I'm not making this stuff up. June 13th was when we looked at it and our target price was 260. We went to it. So you should have taken that off. It came back down to test the 10-day moving average after hitting 260. And now we've broken above it. Can we get follow through tomorrow? If we can, then we're off and running. Again, we did send out an alert in our speculative portfolio for our alert subscribers today on advanced auto parts. AutoZone and O'Reilly have been performing very well. Group 1 has been performing well. Advanced Auto Parts has not. It's been going sideways following just a ton of negative news out of their last earnings report. So with this entire sector doing well, you look for where's the underperforming one. Now, it didn't qualify in our indicators that we use for our impulse, which is our directional portfolio, or the volatility or time strategy. So when we see something that looks interesting, but it doesn't fall in the exact parameters that we send out to our subscribers and say, here's what we're looking for out of alerts for these, then we put it in the speculative portfolio. Our alert subscribers know that, and then it's up to them whether they want to follow it along or not. So giving it a little bit more time, it may mean the next earnings report, but their last one was so ugly. And with the sector doing well, it seems like perhaps there could be an earnings surprise to the upside. And if so, then we're going to do very well. We had a speculative trade on rig, and turns out that, gosh, if anything, we got out of that one too soon. So finishing up GPI, we'll see if we get follow through tomorrow. I'll look at the volume here and getting it to scale. Once again, good solid volume. That's what you want. So the likelihood of this continuing higher is very strong. And as you know, we did look at rig here. We had it as a case study consideration here on TradeFinder. It was also an alert in our speculative portfolio for our alert subscribers. And it went vertical and we got out, and it's continued to go vertical. Now there's no way, no how I would chase that move. So this is one where you could look at it and say, gosh, you got out too early. Look how much more you could have made. There's not a chance in hell I would have followed this that far. It's way too vertical. And so, you know, if you're still in it, great, congratulations. We had a really nice gain in it, but that's outside of the rules that I follow. And that happens sometimes, but that's too vertical for too long. And we had a nice trade. So we leave it at that and move on. Gosh, it continued to run. We were right. And you could argue that perhaps we got out too soon. I don't view it that way, regardless of what happens, because oftentimes, see, it just consolidated a little bit here and then took off again. So this is where we got out, but then it took off again. That's just too vertical, too long. And I'm worried that correction could be too significant. Maybe not. Maybe it continues vertically all the way up to 9. And you can look back and say, yeah, you gave a lot away. You left a lot on the table. We had a nice gain. Then I'll leave it at that and move on. All right. Sorry, Zach.
No worries. Next up, we're going to go with LCID.
Oh, listen, the one everybody loved the thumbnail that I liked the car better than the chart. Well, it seems like the chart got offended. to that commentary, but that was back when the chart looked like this. And it's like, that's a pretty ugly looking chart. Well, we've gone through the wave 4 correction now. And so, yeah, it's so odd, the timing of that. It's almost like as soon as I said that, the chart said, all right, well, watch this. And we move back to the upside, but we're right at the 38.2% fib level now. We're at a ton of resistance. So this is an easy one here for looking at. If you're following along with this, if you caught that move to the upside, tighten your stops, because there's a ton of resistance here at 8, a lot. And we're a tiny bit overbought here. And we're also at a major, not the major, 61.8 to me is the major fib level, but this is a strong one at 38.2. If we can break above that, you're going to have plenty of time, because this will likely run up towards these highs around 12 or 13 if we can break above 8. And hitting that much resistance, you're slightly overbought already. It's had a nice move. Maybe it needs to rest a little bit. Ideally, let's go sideways here for a little while and then take off and run towards that 13 level, and you can catch that move. So if you're long this, I would tighten those stops. If you're looking at this as a short, you want to watch this 8 level. It could hold. It's at a fib level, so in a qualified 5-wave to the downside pattern, maybe 8 holds and we turn and move lower. But if we can break above 8 with follow through, there's going to be one heck of a short covering rally, and that would likely run it up towards that 12 or 13. So if you short this, be careful, watch it. If it starts to break above 8, I think you want to exit that short. If you're long, same thing, watch 8. If you get follow through, same scenario. I think you get the short covering rally that could run it up to 12 or 13. So it's caution, yellow flag warning right here at 8.
Roger that. Next up, we're going to go with SQ.
SQ. We had looked at that one a lot and then hadn't looked at it for the last few weeks. And gosh, everybody knows what happened in the market today. Huh? This is so much fun doing this, because we have people that are in tune with what's going on in the markets. Y'all aren't asking about crazy stocks. You're asking about stuff that's moving. So you're following what's going on. And the break here above 70 is significant. But what's next? You know what's coming. Can we get the follow through? We're a little bit overbought. Not too bad. We had a little bit of consolidation. Would have liked to have seen a little bit more. The negatives here are we need to have the follow through day, and we filled that gap. So that gap right there from March got filled. And you can see we backed off right after filling it. If we hold 70 and bounce and take out today's high, I would say that I think there's a high likelihood that we're going up towards these level 85 to 90. But that has to happen. We have to hold 70 on any sort of a pullback. If we break below 70, that's all off the table. If whether or not we continue higher with a follow through day tomorrow, or if we break back down tomorrow and test 70, if we can hold 70 and bounce, I think you got a nice bullish trade. If we get follow through tomorrow, I think you have a nice bullish trade. But we filled that gap. It's in a qualified 5-wave downward pattern. So there's still potential for a move lower there. Those are the things to watch to see which of those scenarios plays out.
Very well. Thanks, Rob. I see we're a minute after time. You got time for one more, perhaps?
Yeah, let's do one more.
All righty. We'll end on this fun one from Angel. Hi, Rob. Hope all is well. Question is, I got a price target of 240 to 233 for Tesla, next fib level, due to collateral damage from the new Twitter killer from Meta in Twitter wars since Elon pledged Tesla stock. Thoughts?
Yeah, that was interesting, wasn't it? And that was the whole stuff on Meta's new, what are they calling that new thing that they have? But they were really shocked on how many people subscribed in such a short period of time. Is that there was someone that produced a chart that showed that Twitter activity significantly dropped off as people were signing up for whatever, I forget the name of it, the new Meta product. What is it called? Threads. Yeah, that's it. But I could submit to you here on Tesla, we gapped up and we came down and filled the gap. And we have a little doji here right on top of the 10-day moving average. We needed to fill that gap anyway. I still would be stunned if we get this close to 300 and don't hit 300 on Tesla. Now, the market has surprised me before, and it will do it again. If we don't hit 300, this will not be the last surprise the market gives me. But getting this close, the tractor beam, the Star Trek analogy of drawing it up towards that level. If you wanted it to go to 300, you could have made an argument, well, let's get to 300 first, and I can close it out. But it decided it wanted to fill the gap first. So that's not the end of the world. That's not horrible technicals. We've come down, we filled the gap. We closed right on the 10-day moving average. We have a doji. Now, if we break down tomorrow, then that's a different story. So if Tesla breaks lower tomorrow, then it may very well be coming down to test 240. But if it holds this level and breaks higher tomorrow, then I think you see that 300 level. So it's not fun if you're long Tesla over the past few days, but you needed to fill that gap for any move to move higher and have any chance of sustaining. So I don't think it's the end of the world yet. We'll see what happens tomorrow. A lot of these stocks, we need to see what happens tomorrow for follow-throughs, reversals, whatever is going to occur. The CPI is coming out tomorrow. Going to be a really busy day tomorrow. So we'll have a lot to talk about next week on all these things that we've covered, especially with 3 different considerations here based on they all need something to happen tomorrow. Thanks as always for spending some time with us. Time's the most valuable asset we all have, and very sincere when we say we appreciate you spending some of your valuable time with us, and hope you found this informative and maybe a little bit entertaining from time to time. Have a great rest of your week, and look forward to talking